So everyone, thanks for having the call. I'm Brian Hannigan, obviously from InsureHive. If I haven't talked to you, thank you for taking your time to be on the call with us. What we're doing now, we started in InsureHive, is every Tuesday we're hosting kind of like this open mic night, if you will, at 11 o'clock Eastern time. So I know agents in the West Coast, it's early for you guys, so get your cup of coffee and thanks for joining us. But every Tuesday we're doing this hour of power, if you will, or open mic night. We're featuring a carrier on the InsureHive platform, and today I'm so extremely excited to have Chris on the phone from Steadily, which is a pretty new company for landlord risks. And challenging market on the property side has been around for 3 or 4 years, and I think it's extremely valuable to have a company that'll do monoline. We all know companies like Safeco will do it, but you have to do the package. And the customer only wants to do is three rental properties, or Foremost isn't competitive, and how do I get a quote? And I don't want to use the court forms back and forth. So I think Steadily we're really excited about it because it's the tech-driven platform for monoline landlord risks. And most of the agents, Chris, are already, I think, on this call. We do have some that are just looking into getting appointed, and they're in the interview process. But I just want to turn the call over to Chris. Chris, sometimes we'll do like an FAQ where I ping you questions that agents have asked. I don't have anything prepared, anything script, but if you can kind of touch on who is Steadily, why should agents care, and then we'll do how do you get a quote. If you haven't gotten a quote yet from Steadily or bound policies, we'll walk you through maybe just how to log in. And then if you need credentials off the call, let us know and we'll get you set up with credentials. And then lastly, in the last 5 minutes, I usually open it up to agents, like a town hall meeting where they can everyone's muted right now, but we'll unmute everybody and then you can ask any question that's on your mind related to insurance. So, Chris, what the heck is Steadily, and where have you guys seen the success so far in this year?
Yeah, no, I appreciate it, Brian. I appreciate the opportunity to have a conversation with everyone. So I'll give you a little background on Steadily, who we are. First of all, me, I've been in insurance for 20 years. I spent 18 years at Farmers Insurance, district manager here in Kansas City. I had moved all over the country, lived in Novi, lived in LA for about 10 years, in Chicago as well. So I kind of bounced around before settling here in Kansas City. We are based largely in Kansas City. About 70% of our people, we're a company about 200 people right now. When I started a year and a half ago, it was half that size. So we're growing quickly. Engineering teams down in Austin, Texas. Our roots started in 2020, actually. Our CEO, who's original, there was 3 co-founders. He developed a tech, some sort of technology. I'm in insurance distribution. I don't know all the tech language, but he started a tool that was purchased by Indeed resume job board. With those proceeds, he obviously made some money on that. He bought 30 rental properties throughout the U.S. He kind of went through the process of trying to get insurance on it, and that process was not as easy as he thought it should be. I think we all have dealt with that at some point, where you either going back and forth, extra questions coming back, just the time it took. It seemed like no one really wanted it, really wanted the properties, especially the whole portfolio. So that's kind of his moment when he had the idea that maybe he starts maybe there's a need for a insurance company that focuses on the rental market space. It's not something they do as a part of the insurance offering. It's all that we do. It kind of helps us be able to try to understand the market itself, your Airbnbs, short-term owner-occupied rentals, all of those things. So we have offerings for all of those. And then probably just as importantly, building something in 2020 on a tech platform that means that it's nimble, it's easy to, like, we make changes almost always for the positive, and making enhancements to our platform, making it easier to use. You'll see, like, if you have done a quote with us, or once you get in there and quote, it's such an easy process. We ask what we think is the least amount of questions that have to be asked to pull the data to have an accurate quote for the risk. That's kind of, anytime we talk about adding something to the platform, that's the litmus test that's used is this necessary? Does this just make it harder? How often is this going to be, you know, actually used versus, or where else can we get this information without having to ask the agent or the client? Can we just pull this from somewhere? Includes photos, right? We use Cape aerial imaging on the front end to be able to pull aerial images so that we don't have to say, hey, submit all these photos to us. We got a good idea of the risk once you put that address in, we've got a pretty good idea of the risk. You don't have to get out there and get photos or, submit accord forms like Brian alluded to. We pull all that information. We don't need that. So yeah, it's been over the 5 years. Going into the origins, we started more as an agency than we did as an actual carrier or MGA. It was essentially an agency that just had appointments with companies that could do this. So we just focused on being a place for customers to be able to go to, and then quickly evolved into having a fronting carrier paper carry the surplus for us as we create the program that we could write on, that the agents could write on, and then opened up agent appointments about 3 years ago. And doing that really catapulted our growth through the agent distribution. Like 80% of what we do today is from our independent agent partners. We have more of a feel of a carrier than many MGAs. We don't white label a product where if there's a claim, you're going to deal with someone from the carrier, or underwriting goes off to the carrier to underwrite. We underwrite in-house. We oversee all claims, and 80% of them are adjusted by us. So it's very much a carrier feel, even though we are technically an MGA from a surplus standpoint. So yeah, that's kind of where we started, where we are today. From a growth perspective, we're, eclipsing, I think we're quickly approaching $500 million in premium. We should be there this year. We just launched New York yesterday. So you probably didn't know about that yet, Brian.
No.
I don't know how big you have a market out there, but we are now live in New York as well, with Kentucky coming probably in the next couple months, and then Florida probably by Q3 this year.
Okay. With that New York, off topic here, will you write in the 5 boroughs of New York?
Yeah, we will. We basically have restrictions for, and there's a map on that site that you kind of linked with the underwriting guidelines. There's state maps, and there's a map in there for New York of what part of like Long Island is going to be restricted by the water. But I don't know. It's the edges of Long Island are restricted by the water for our primary DP3. But we will do condos a little closer to the water, the studs in rental policy.
Okay. That's great. So I think right now, anything, looking at the agents on the call today, before we open it up, there's the big concentration is in the state of California, as well as Indiana. Is there any special nuances that you need to know? A lot of times the agents, will read an underwriting guide, but there's the underwriting guide and there's the real world. Any tips that you have for binding, or especially in California with the fires and brush scores and everything like that?
Yeah, so California, we have what's helped us a lot in California is we increased our CAVE to 1.5 million. That was really restricting our ability to grow in California. Those agents in there in California know. There are parts of the state that you can find things under 1 million where we were before, but that kind of eliminated a lot of the state. So bumping that up to 1.5 helped. And then our DIC offering has helped a lot of agents as well. Just us having an offering in some areas that early on we wouldn't write at all. And obviously everyone, I've operated in California for a decade, and fair plan's obviously a big part of your life, whether you want it to
Hmm.
be or not. So it kind of opened up that for us. I think California is a state now. We just added more capacity. So if we were running into capacity blocks, you may go back and retry. We just added more ability to grow in California. So that's a positive for us. It's been good for us too, although the state can be, a challenge to operate within. We've been profitable and been able to grow. So we do want to keep growing in California. Um, in Indiana, it's
Hmm.
one of our strongest states. That
Okay.
one, I think, that one's on an admitted paper. We do oversee all claims in Indiana. Seems to be pretty smooth. I think I get a lot of questions. So one thing I will say, reading between the lines of a underwriting guide versus the practice of the underwriter. Um,
Hmm.
I don't know why Indiana must like a lot of population must be around universities, because my Indiana agents often ask about student housing. The underwriting
Hmm.
guide says we don't do student housing. Here is the way it actually works in the real world.
Hmm.
If the property owner if it's only marketed to students, so if it's on campus, it's only marketed to students or run by the university, we would look at it and say, hey, we can't do student housing. But if Brian owns properties in, South Bend that
Hmm.
happen to be on the campus and they just happen to be rented to students, we will accept it. So there's no restrictions in our policy for student housing. It's more of an underwriting guide for things that are solely marketed to students. So we end up doing a lot in college towns because of that. A lot of student housing isn't set up just for students. That's who they normally get because they're on the campus or in the college town. So
Hmm.
that's one thing that I do run into on occasion. I don't know why Indiana, but that is one of the states that I run into that frequently.
What's an example of, because one of my frequently asked questions, someone on the call did ask about student housing. And for about 4 or 5 years, we had an office in Ann Arbor on the
Mhm.
campus of University of Michigan. So we were like right on campus. And so agents have struggled with it because foremost won't do student housing. And when I think of student housing, I get it. There's duplexes and you're renting it out to a couple juniors and they're rented out. They just happen to be students. What's an example of student housing where they market it as student housing? Like it
It's
doesn't
actually,
say like University of Michigan dormitory building 5. That's like the dorm. What's an example
yeah.
of student
It,
housing that would be ineligible?
Yeah, it's actually something that I didn't know existed either. I've run into it though since
Mhm.
being here. Someone may have their LLC as, um, you know, University of Michigan or
Mhm.
Michigan Students Living LLC or something.
Oh,
Um,
okay.
or if the underwriter were to Google the business and it's totally focused on students. Those are things that we've run into that seem to be aimed at students instead of my father-in-law, who owned 4 campuses or 4 homes on the
Yeah,
University of Missouri Kansas City campus, and
yeah,
uh, and rented some to students, some to teachers, some to just
right.
depended on who is eligible, who is able to get qualified for the rental.
Yeah, so if the house is a big sign with like Omega, Omega, or Lambda, Lambda, Lambda,
Yeah,
that's
yeah.
probably ineligible.
The Greek houses.
Yes.
And being in insurance this long, that's one thing I noticed. I would drive by campuses and see a Greek house. I'm like, I wonder how they insure that. Like, who actually writes that?
Yeah. Yeah, that's right. Usually a ping pong table on the front lawn.
Yeah,
Um, for sure. We've all been there. Hey,
beer
one other
funnels
question we
hanging out.
got is, will Steadily do LLCs if it's in a business LLCs?
Yeah,
Okay.
yeah, absolutely. So, and kind of touching on that, we write on personal lines paper. It's either DP1 or DP3. Sorry, California, no DP1. I don't know if that's a California thing or what, but
Mm,
those are our options. So although it's personal lines paper, what we want to do is just match the deed, the primary named insured to the deed. So if it's in a trust or in an LLC, then we
mhm.
want that as a primary named insured. So it's no problem for us. Um, we can do schedules up to 40 locations on one policy. We have no cap on number of properties per insured either. So if someone has 100 properties, bring it to us. We'd be happy to take a look and see what we can do.
Okay, we did just get a question from an agent in Bloomington. What's the max properties on a policy? And I think you
Yeah.
just said,
It just
did you
did
say
40. Yeah.
100?
A 40 per policy, no max per property owner. And this is one of the things. So just talking more about Steadily
Yeah,
and where we're headed. Um, we're trying. So one of our initiatives. So we want to stay as a branded rental marketplace for when agents have rental properties, they come to Steadily. We want that to be a strong brand recognition. So some things we're trying to do is in 26, we're trying to be better at the mid-market. Those people with 40, 50, 60 properties, there's a lot of little things that make it very difficult for them in the insurance marketplace. And
right,
so we're looking one of the next steps is going to be blowing the cap off of that so that you can have unlimited properties on a schedule. That I think that'll come sometime here pretty soon. And then some of like the mortgagee bill stuff, because we run into this problem that I think a lot of carriers run into, that if you have multiple mortgages on one policy, there are notoriously difficult mortgage companies, whether they just with getting things processed timely and things like that. So one of the things we've had a hard time troubleshooting is if one of those mess up, the entire policy cancels and it becomes a mess to reconcile. But we're trying to work to find a solution for multiple mortgages on one policy, so you can schedule them all, even if they're on different mortgages. Some of the capacity issues we have. What we know about landlords is if someone buys a duplex to get a good deal on a duplex, they buy 8. So right now, today, we have a max TIV it's max CAVE per rolling quarter mile of $2 million. So with some of this extra capacity, we're trying to find ways to be able to still be able to write all that on one policy and not run into those capacity limits. So it's something that we're focused on, trying to be better in this space, so that when you run into these mid-market ones, there's no carrier that does it better. Our prices are competitive, so why would you go anywhere else?
yeah, that's great. I don't know of any company doing up to 100 properties. Um, that's great. Is your bread and butter? I know you'll do it. Is your more like the onesie twosies? Bob Jones has 2 rental properties, or he couldn't sell his house, so it's now a rental. Is that where you're seeing most of your business coming from? Or is it these large, almost like REITs, what a real estate investment trust is? They go in and buy 100 rental properties. Is that is that where the sweet spot is?
Yeah, so we started. Our roots are with
The mom and pops?
mom. Yeah,
Yeah.
they just rent out their old home that they lived in or something like
Hmm.
that, or they bought a property just to try to diversify their portfolio. But
Yeah.
we've definitely grown into. I think we have partnerships with some of these bigger organizations that are real estate investment organizations,
Hmm.
and we do well there too. Just for how easy the platform is. If you even just think about how hard it is to quote, uh, sometimes it just means you're not going to reshop it unless you have to. If you have 40 locations on a schedule, it's going to take days to get that in, go back and forth with underwriting. And with our process, when you get into the quoting platform, you can just add an address and just keep adding addresses to put them all in there. So you could get a quote back in an hour. So that's I think we've definitely seen most of our growth in that space, and most of our growth has been driven by that space. But that's probably why we're now identifying more of the pain points to be able to make it better for them too.
Yeah. So one of the questions we got are you more of a commercial lines company, or are you more personal lines? And it sounds like you're a personal lines company, but you are really going
Yeah.
after, like in my day, if I got like 5 properties, I would say, I would tell the guy, you need like a commercial BOP. You've moved on to a mom and pop person. I can only put 4 on with Foremost. Now you're buying up to 10, 20. You're going to keep buying 30 more. You need a commercial policy, buddy. Is it, but it sounds like you guys are personal lines company, but you'll play in that underwriting box as well, it sounds like.
Exactly. A lot
Yeah.
of the agencies, it's all on personalized paper, right? So it's
Yeah.
essentially personalized paper. But since we do allow the entities, the business entities, the trusts to be the primary named insured. We kind of float in the middle. Like I deal with a lot of agencies who are commercial only agencies, and they use us because of those larger schedules. You know, they're moving LROs to us. They're moving things that are just had been traditionally in the commercial space. They're moving it over to us. I
Did
just
you did you see LO? You'll do LROs?
Well, I mean, it's on the DP3. They're just moving them over uh,
Okay.
as an offering for them.
When I think you're probably a lot smarter than I am. When I think of an LRO, I'm thinking like a strip mall or an office
Yeah,
building.
so uh, they can be. We won't do so. I will point that out too. It's probably one of the things we have to say no to most commonly is if there's a building, if there's a business on premises, we have to say no to it just because we are on the personal lines paper. But based on how some of these things are written, you have some of these properties, especially quadplexes and stuff, that are put into that initially, and then just gives another offering.
Yeah, but not a strip mall.
Yeah,
Right.
nothing with a
Yeah.
business entity.
Got
It's
it. Got it. We did have a quick question. We got about 6 minutes left, but uh we had a question from an agent in Texas, liability. Um
yeah.
yeah, it does include property and liability.
It does. So just quick rundown of what you're generally going to get on a quote. You're going to get your up to 1.5 in Cov up to a million in premises liability, your 1 million, 2 million aggregate. For those owner occupied dwellings, you can do a 500,000 in personal liability. So the liability is on the policy. It's a standard DP3 primarily. 90% of what we do is DP3. And then, you know, your coverage D will end up being loss of rents or ALE if they're also living in it. So it'll default to 10% of Cov, but you can go up to 30% without any tussle from underwriting. So it seems to be a fair amount to be able to do.
That's great. All right, in the last 5 minutes, Patricia, can you unmute? We'll just leave it up to see if anybody has any questions for Chris. Sometimes we do, sometimes we covered it all. But why don't we just unmute everybody? And if anybody has a question, just shout it out.
Yeah, so everybody can access their microphones. You can just unmute yourselves from your end if you have any questions. Or if you're feeling kind of shy, you can also put it up here in the chat box.
And real quick, while you guys think of any questions, Brian, one thing that did dawn on me when speaking specifically about California, right now, so across the country, with the exception of California, Arizona, we go back to 1870 year built, so we'll do older properties. California is limited to
Wow.
1940. We are currently working to back that up. So it may be 1920, it may be back to 1870. It's something I would say here very shortly, we will have opened that up to be able to do some older properties. And for California, it's a big win because I know it's a limited space for those older properties.
So it's year built 1940 in California,
Yep.
but you're working on going back to
It is so the things
1920.
Yeah, so we've had conversations, and the goal is to get it so it's uniform, 1870, and it's almost I don't do the filing. I don't. Well, it's not admitted in California, so I don't know filings. I don't work on the underwriting part of it, but we do. I do know that talking with underwriting during these conversations and product, kind of negotiating to like 1920 comfortable with. So even 1920, we've gotten feedback from agents that's still going to open up a big part. Obviously, California has some older homes, but not like the East Coast. So yeah, somewhere between that too. And I saw the question about updates. Anything
Mhm.
anything you get that's 100 years old, you know, underwriting is going to ask that if just confirmation. It's an email confirmation. Yes, it has. Has HVAC, plumbing, electrical been updated in the last 30 years? So we don't need inspection reports or anything. Just replying to that as a attestation essentially from the customer. So your old copper plumbing and knob and tube wiring and all that stuff. We don't want. And so yes, we do have a limitation in Texas. So a couple things in Texas. You hit the coast. We have a offering with a wind excluded offering out there. We can do the tier 1 wind zone in Houston has the Windex, works well with TWIA. We also have a wind excluded product in tier 2. It seems to be a gap because there isn't an offering from the state wind pool. So I would say your tier 1s we seem to be pretty able to do, like we seem pretty competitive down there. I'm kind of wasting time before I have to say that DFW is the only restricted counties in the country. We are working on a pilot right now to test reopening DFW because it's like, population wise, it'd be like bigger than 35 other states. So
Yeah.
sorry, Linda, but we are working on it right now. So that is a positive. The whole time I've been here, it's been restricted, and now we have opened it up in kind of a test pilot with our direct team. Our goal is to open it up more. And on the question on older properties, as of today, we'll go back to 1870 for 42 of the states. So most of the states, exception of California and Arizona, it's 1870. California, I don't know a time frame on opening up California to more, but I can tell you with my experience with Steadily, things happen quickly. So I would imagine it would happen here pretty soon. I'll just we'll get an email and we'll send out communication that it's open now for more for older properties.
I was just making my notes. You go back to 1870. That's amazing. I mean, usually here in our area, like 1870, 1880, those usually are historic homes, and they have that historic plate, the Oswell house, and it's a historical home, and that usually kicks them out of their underwriting box.
That also kicks it out of ours.
Oh, it does? Okay.
The historical part does, the age doesn't. But I'm glad you pointed it out. So at least I could, be transparent.
Yeah. So I guess a historic home, if they're registered on the historic registry, that kicks them out. But if the home was built in 1880, I guess you get a lot of that on the East Coast, right?
You do, yeah. East
Massachusetts,
Coast.
Rhode Island. Yeah.
Yeah, exactly. And honestly, we see a lot. What we end up doing a lot of those 1920s that have been renovated and they're in good shape. And there's a lot of those out there that we end up doing.
Yeah. And then talk real quick before we go about the updates. They just I heard you don't have to send in confirmation that the roof is 6 years old. It's just a field you just type in, a guy updated it 8 years ago, because it's usually when you ask that question, it's like you'll get, I don't know, 10 years ago, it was here when I bought the house. I'm not sure. There's no sticker on the furnace. I really don't know when it was updated.
Yeah. So we just asked for an email confirmation that yes, it's been updated in the last 30 years. It's not. I think it's because that's a problem too. Like with plumbing, unless you stick your head in the walls, you don't really know, right? You're assuming some things, or many times they're partially updated. So I think it's just our way of trying to do our due diligence and having some sort of confirmation of it. The part about the roof's kind of cool because we don't even ask the age of the roof. We'll just pull photos with those satellite photos and see if it's an insurable condition. There's no roof age on our policy, so if it's 22 years old but it's in an insurable condition, we'll insure it. And something that's helpful with those larger, let's say you have a schedule of properties, then let's say one property has a rough roof, our underwriters may use a roof exclusion form on it, and the agents actually really like that because they'll say, hey, we got cover, we can cover all your properties. However, this one you're gonna have to do something with the roof, and they generally go out and replace the roof, and then we can remove that exclusion form.
Okay. I think we got time for one more question.
I saw one pop in there. I got distracted by it for a second. And then if the systems has not been updated, then it's not eligible. Yeah, Linda, it does need to be updated in the last 30 years. I think we asked that question once we get around 100 years old.
Okay. And if you're wondering how to get a quote, it's all done in the Steadily portal that I put in the chat as well. If you don't remember your credentials, I'm guessing there's a forgot password link. I think, Chris, right?
There's no password. You just it's your email address, so it'll send you a one-time code. So no need to remember anything. And I just chatted my email address too, in case something pops up later. You got a question, just shoot me a note. I'm happy to answer anything.
Okay, perfect. All right, I think we're good.
Cool. Thank you guys for
Thanks
letting me be part of this.
Yeah, Chris, you too, buddy. All right, see you, everybody.
Take care, man.
Bye-bye.